everyone. I'm your host, Ryan Rosby, and welcome to Market Simplified on Place Your Trades Network. We're the network that focuses on trading daily options using CME's group's event contracts to trade the indices, metals, energies, and even some of your crypto favorites, Bitcoin market futures. Today's broadcast is brought to you by Tradeovate, which is built on the custom app dedicated to trading event contracts, which is what we all use here at Place Your Trades. Welcome everyone to a brand new episode. I'm very excited to discuss with you today. A lot has happened in the overnight with everything going on with earnings. Markets are moving, things are shaking, and we're going to discuss. So if you're new to the show, welcome. The show is broken down into three parts: market overview, today's pricing action, and then event contracts, which is the most fun part of the show if you ask me. So going into some of the market overview situations really quickly, we had the jobless claims numbers come out today. This is a weekly event that happens every Wednesday, Thursday morning usually at 8:30 a.m. Eastern Standard Time. The last time we had 237,000 jobless claims. The forecast was for 242, but it actually came in much better at 228. So this is good. That means less people filed for jobless claims. Continued jobless claims numbers went up a little higher. We kind of bumped up a little bit higher there. Not too much of a big deal, but because to be honest with you, the markets right now didn't really react too much to what was going on here. So those are the two big ones that I was watching there in terms of market conditions. When these numbers came out, we saw kind of a bump in the bonds market here. We saw the 10-year kind of pick up slightly, edging back to that 3.8, 3.85%, which we say it's sitting here. So it's a big bump there on the 10-year, which kind of tends to scare the tech market. So the 10-year and the tech markets kind of have like an inverse relationship. Bonds go up, tech tends to come down. Does it happen all the time? No, but usually when markets are kind of getting wonky and the 10-year is also going up, it tends to add more selling pressure to the tech markets. So that's that. So I want to discuss with you three key earnings that came out last night and then this morning. So I'm going to start off with the first one being Netflix. So Netflix released their earnings reports yesterday right after market close, right at 4 p.m. And they had it was a mixed bag of earnings for them, and they sold off significantly, right? So we saw their subscriber numbers actually grew 5.9 million quarter over quarter to 239.4 million. This was down 1% year over year for FX neutral, due to FX neutral. So that was kind of there, but it wasn't too much of a big deal. Revenue was up only 3%. It was a $100 million miss from where the estimates of the analysts had it. So it wasn't fantastic, which is what caused a lot of the sell-off, which we're going to take a look at when we go to the chart. Operating margins actually came in slightly better by three basis points, so that was actually good to see there. And EPS came in at $3.29, which was a 44-cent beat, which is probably due to this margin bump, right? The margin bump came in, EPS did better. They did present forward guidance of the subscribers numbers would be consistent, so that didn't really help them. People are always looking for growth in subscribers numbers when it comes to these things. They came in for revenue numbers. They said we're going to go up slightly 7%, and operating margin would be again in line, this 22%. This is a cool little graphic if you take a look at to see where the kind of the world of Netflix is going. You can see kind of like a breakdown, slight bumps all over the world of paid members, nothing too crazy. Revenue slight bump, margin slight bump. Their cost of revenue, if you're ever wondering how much it costs to run Netflix for 3 months, 4.7 billion. It's very expensive to make these shows, but you can see kind of like a breakdown, their operating expenses and everything, and then you can see their paid subscribers numbers. You can see the issue that they're having right now is they had like a nice up ramp from 2017 onward, but they've kind of been stagnating in this 222, 230 range, and people don't like that. As an investor in a company, you will always want to get that energy, that big bump, that boost in numbers to show continual growth. But unfortunately, right now, Netflix is having trouble because we're also in a recessionary environment, which means people are not going to be buying and subscribing to these bigger things that they wanted for spending money in discretionary spending. Because this is more of a need than a want. And let's be frank, this season of Black Mirror kind of sucked. So I don't blame people if they cancel their Netflix subscription. But Suits is back on Netflix, which is my favorite television show. So make sure to check that out. Next up is TSM. This has a bigger picture, so I'm going to come to this actually third. Let me go to Tesla first, and then I'll come to TSM because TSM has effects that are creating ripples throughout the market. And I think that's what's really causing a lot of the market movement today, which you might not believe me, but I'll try to prove it to you. So taking a look at Tesla, we can see that the revenue was actually up 47% year over year. This is a $200 million beat on estimates. Gross margins came in at 18%. It's actually 18.3%. It's down 7 points year over year, but it's actually higher. It actually came in at 18.6, came in 0.3 higher than last time, which was 18.3. So actually did much better in margins due to the fact that they've shrunk costs and they didn't drop prices as much. Prices were kind of leveled. I put out like a whole detailed post on my Twitter about this, and my margin estimate was between 16 and 19 on the higher end. So I hit it like right down the middle. It was pretty good. Operating margin regular was 10%, which is down 5 pp year over year. Capex was 19%, which is actually very good. Went up 19%, very good to 2.1 billion. Free cash flow is up 62% year over year. They have a very good cash flow business. Their non-GAAP EPS came in at 91. Their GAAP EPS was 85. Still beat across the board, better quarter over quarter, year over year, doing much better. Deliveries were up 83% year over year, massive, massive jump there. And they reiterated that their compound annual growth rate, their CAGR, would still be 50%. So they're still aiming for 1.8 million vehicles by the end of the year. That was one thing that I was personally watching very closely with Tesla to see if they reaffirm their guidance. Personally, I'm an investor, full disclosure. So for me, this stuff is important. And they gave us like a cool little graphic here on the breakdown. As you can see, cost is very, very high still for these vehicles because these minerals, all this stuff are very, very expensive. But you can see kind of it's breaking down. Now, Tesla did sell off significantly after this, mainly due to the fact that the presentation after the earnings call wasn't exciting. Elon didn't break it. He was versus other times that he's done decently well, like for the battery day and the Tesla Cybertruck event, which was very good. He didn't have the excitement that was needed, so people kind of lost hope. And there's a lot of fear that now that the blackout period is done, he's going to go and have to sell more shares of Tesla because Twitter is 50% negative cash flow. So that's Tesla there. Third, last but certainly not least, again, I'm telling you, in my opinion, this is the most important one. So if you're not familiar with Taiwan Semiconductor, TSM, they're the company that makes the chips for AMD, NVIDIA, Apple, and many, many, many more. And these guys actually had a revenue drop. These guys had a big revenue drop, which means what? People aren't buying as much chips. That's really conflicting to me in my head because on one end you have Nvidia saying we have so many orders we can't fulfill them. We had that article come out to say that people are moving to AMD from Nvidia because Nvidia just doesn't have enough to provide for them. So it's kind of weird, but we're going to dive deep into the numbers here as well. Revenue was down 14%, gross margins were down slightly to 54%, operating margin was 42%, slightly down. Capital expenditures 8.2 billion, and then you can see here that their 5 nanometer and 7 nanometers were 30% and 23% of the revenue respectively. I'll explain that in a second. So to kind of make it English from where these tech numbers are, so their high performance computing, their supercomputers, GPUs and stuff, made up 44% of the revenue. Smartphones were 33%, slightly lower. So what does that mean? That means people might have bought less iPhones. Less iPhones were made, and we saw this last time. The smartphone numbers for TSM were lower, and it directly correlated to Apple and Samsung. So that right there is going to show me an insight as to what the earnings are going to be for these other two companies. That's why it's so important here. The high performance computing to me shows that NVIDIA's projection of 11 billion could be in line. Internet of Things was flat, automotive was up slightly, and we can see that really like, all right, cool, like slight bump, not a big deal. That means it's in line. Consumer electronics flat, and everything else was also slightly up. Their cost of sales was up, and we discussed all this other stuff here. Now, the reason this is important again is because it shows direct insight as to where these other companies could be performing. Mainly, again, as we were discussing, the smartphone sector for Apple and Samsung, high performance computing in line again. What does that mean? Maybe Nvidia doesn't hit that 11 billion. I don't know. They reaffirmed just a few weeks ago that they could, but maybe they don't. Again, I'm an investor in both Nvidia and AMD. I'd love them to come in and beat, but this to me signals that, hey, if you're in line and your revenue still 44% of it still in line is made up by these high performance computing chips, and enough of them aren't being sold enough to push this might be an issue. So that's why I think that these two are the two most important ones. So going on and moving on to today's price action, I'm going to essentially take you through all three of those that we discussed really quickly to see where the markets are moving and how they're reacting to this. So let me just collapse this. So we can see here that Tesla sold off significantly. It's down to 270 from where we closed yesterday around 292, 293. It's down significantly, kind of consolidating around this 270 level. If this 270 level gives out, we come down to 263 and essentially start filling some of the gaps that we had down below. In order for us to make our next leg up or kind of start to recover, it's going to need to take over this VWAP range around the 275, and then the 280 range is where the next battle is at this 50 EMA to start to fill this gap. I'm personally confident in Tesla, not financial advice. So to me, I'm keeping my eyes very closely, hoping for more market fear to cause more of a sell-off in order to be able to buy shares for cheaper. So that's Tesla right there. Next up is Netflix. Netflix is a company I've never been a fan of personally. Just there's not much appeal to me. To me, it's a big money hole. I've never been an investor, never been a fan. Even when Bill Ackman invested, there's a tweet out there for me right under his post saying, "Hey, I think this is a big mistake." It turned out to be true. He lost millions of dollars on that investment, and you can see here that Netflix once again returns back to its humble beginnings, back down to essentially where we were in the beginning of July. So essentially, it's given up a ton of its gains from the past for the past few days, back to July, essentially back to the July 11th era. It's actually holding up much better than I thought. If this starts to give out this volume gap right here is where I'd be watching, kind of like this 400 range. I'm not too crazy again about Netflix. I have no interest in investing in them personally. Next up, TSM, third and final one I want to take a look at before we go to our event contracts and start discussing ES, because I want to show you how the overall markets are reacting to everything. Let me actually turn up view up for 1 second so we can kind of see how everything is moving, right? This is the exciting stuff, right? TSM took a hit as well, down about $2 from where we closed yesterday. So actually more, $5 from where we closed yesterday. We closed up to 103. We're down to 98. $5 drop. Again, I think that a lot of the price action negativity that's revolving around Taiwan Semiconductor, and again, this is one that's notorious for gaps, which always scares investors. I mean, if we come down to 90, I'll be loading the boat. Personally, I'd love it down here again to purchase more shares of TSM down here in the 90s. That'd be great. But again, one thing to really keep in mind is the reason that this stock has not been moving the way that its counterparties that are AMD and NVIDIA have been moving due to the AI movements and everything is because of a lot of the political overhang around Taiwan and China. So you want to kind of keep that in mind there as well, because that's the overhang. If that overhang is lifted and hey, there's nothing going on, or hey, the factory in Arizona is finished, you'll probably see more price action and movement possibly on TSM. Again, not financial advice, but this is the movement here. So let's now go to ES. So let's take a look at how the overall markets are moving. Let's go to SPX first, and then we'll go to ES. I want to show you how things are moving in intraday. So taking a look at it on the hourly chart, we can see that we sold off slightly, but that 20 MA on the hourly caught us. 20 MA on the hourly is one of the key levels that I always keep my eye on, always, to see if it's going to drop, hold, and it held. It also revolves around a new indicator that I'm liking to use, which is called the Kelter bands. Kelter bands, we kind of, every time we step outside these Kelters, we always return back to the basics, come to the 20, and the 20 has been holding. And a parallel situation is happening, thankfully, right here. I like market sell-offs, I like cooldowns, but I don't like massive drops. So because it's fun to trade the drops, it's fun to trade the rises, but I like green days are always more fun. People are much more kinder on social media on green days. So this was a very good sign. So going to ES now, taking a look at our futures, because we're going to discuss event contracts next, we are seeing a very parallel situation here. So on this end of the spectrum, on the hourly, we're actually under the 20 MA. The 20 MA wasn't able to catch us. We had a bit of a bear flag happening here late last night rather. It sold off, came down to this 78.6 fib level and began to bounce. This is going to have a big battle to try to get over this trend line, this blue trend line here, which is parallel right now to our 20 MA. In order to have any form of movement up, you need to break through these, get over this 45.9450, and make its way up. One thing that I'm keeping in mind as we go into next week's Fed meeting, because next week we have a Fed meeting, so on the show next week we'll be discussing the fallout of that Fed meeting, is will the Fed take into account some possible earnings compression that we're noticing in the first week off of these two big tech companies into their decision to raise rates again or not? So that's kind of one thing to keep in the back of your head as this is happening right now. So I'm watching this very close. This is the key level that I'm watching, this 45.72. I'm actually very happy with this actually holding, which gives me confidence that this level will probably hold. We're kind of really done for earnings for the week. I'm just going to double check really quickly. I have the calendar saved to my phone. To see if this puppy's going to hold us, or if we have something else that could possibly kick us in the teeth later today. So we have a few more bank earnings this week. Amex, Capital One, Berkeley, First Financial Bank, but nothing that's going to possibly be too crazy from my point of view. We don't have any other techs until next week, and that calendar isn't out yet for me to kind of review with you guys. But I'm much more confident that this kind of level holds, or we consolidate around this level, this range right here. So going to our event contracts, you can sign up for this by going to tradeovate.com. Links down in the description. Sign up, get in there. Let me explain to you what this is. You're able to trade event contracts for the S&P 500, NASDAQ 100, Dow Jones Industrial, sweet crude oil, gold, the Russell 2000, Euro US dollar, Henry's natural gas, silver, copper, and of course for the crypto bugs, we've got Bitcoin for you. And you can see that Bitcoin, just like the overall markets, is having a little bit of heartburn this morning and kind of selling off. So how event contracts work is you go to your strike list and you're able to say kind of make your position, take a position on if ES. So for example, we're in ES. So if ES, if you're doing sweet crude oil, you could do sweet crude oil, but you take a position on and you click yes or no if you believe that we're going to close above a level or not. So for example, if I clicked yes, we're going to close over 46.20. I'd be paying 50 cents, just 50 cents, not $50, 50 cents. It's not a 100x multiplier like options contracts are, just 50 cents to purchase this initial contract. So for example, in our situation here, we were just discussing saying I believe that we can close over 45.72, and these are zero data expirations. What does that mean? They expire the day of. You can't buy them for the future. At the end of the day, they expire. If you were correct, $20 cash out. Good. If you were incorrect, sorry, you just busted the bank. And throughout the day, at any time, you have the ability to take profits or cut your losses. Let's hope you're taking profits. Anytime during the day, you have the ability to take profits or cut losses if you wanted to. So if you want to scale in by 50 and then scale out 10 at a time, 20 at a time, 30 at a time, whatever you're comfortable with, you have the ability to do so. Trade them like regular contracts, and they move and react. And I think they're a very, very, very good tool for beginners because it allows you to taste and kind of get a feel of what's going on. So 45.72 is this big level that I'm watching. So let's find that on the strike list, 45.70. So right here. So if I'm confident, I'd be buying these contracts, saying that we do close over 45.70. But now let's play a little game here. Let's play a little game. So if I wanted to buy the 45.72s, that's 14.25. But I'm also saying, hey, we're going to close over 45.72, but I don't think we're going to get over 45.85. So finding 45.85 would be 45.90. So 45.80. Let's just say 45.80, which is right here. Let's just say I don't think we're going to close over 45.80. So if you wanted like a cheaper alternative, I know from rather more risk, more reward to your risk, you could probably go with saying, no, we're not going to close over 45.80. You can buy that. But personally, if you wanted to buy like a bigger position to kind of maximize your return, so let's say this is 14.25. So let's say 20 divided by 14.25. So clocking it at actually a nice 40% mover here. If you're correct on this 45.70, you could confidently buy these $14.50 ones and say, hey, I'm confident. I think that we will close over 45.70. This is probably one that I would lean towards heavily, and you can see that the markets are kind of reacting in a positive way just now. In 2 seconds, we move the markets on this one. So I would probably be very, very much happier to go with these 45.70s right here, just because of this technical analysis here on what's going here. And that's probably what I'd be going with. If I could take the trade right now, that's what I would have bought, and it would have, and you can see here, if it comes out correct, it had a 40% upside. Buy like 10, 20, 30 of these. Nice little trade right there. A 40% gainer if you're correct, and then you can also cut your losses if you were incorrect. So one final time, taking a look at this on ES, this is the big trend line, resistance trend line that I'm watching. The big support level that I'm watching is this 45.72. By any means, let's just say you're trading this tomorrow, you're keeping an eye on, and things are going wild, and you're coming back and watching this later. The next level I'd be watching is 45.66. But for a path up, we need to get over 45.85. 45.90. It's funny because it's actually clean levels, and then 45.95. This isn't me just placing every $5 marker. This is actually going back and finding the levels, but somehow cleaned up in around $5 intervals have been actually very, very good for ES. So that's kind of where I'd put my marker in the sand. You can see here that markets are already reacting. So had we taken that position at, what was it, 14.25, 15.75 divided by 14.25, we would have been up about 11% right now on that trade. I know it's funny, but just kind of get into the mindset that these are actually moving like contracts. That's the reason I'm discussing them like the contracts, and keep them in mind. Again, one more time, I hope you enjoyed these. You can pause these and kind of take a look at the markers right there. And for tomorrow, there isn't many market events happening tomorrow, so you're kind of in the clear. But next week, and we'll discuss this on the channel together next week on Thursday at 11 a.m. Eastern Standard Time, we have the next Fed rate increase, and it's projected that they raise interest rates by 25 basis points. Almost 90% of the markets are thinking that. And if that happens, because I won't see you guys until that happens, let me just double check that if I won't see you guys. Yeah, I won't see you guys until the day after. look, if the Fed raises rates, we'll probably have 2 to 5 days of red just to kind of price it in, because I don't think anything's really priced in. Or maybe if it's even just probably 1 day of red, could possibly happen. But if the Fed chooses, hey, we're not going to raise rates, we're going to skip again, markets will really like that and react positively, and we'll probably see a nice little ripper there to the upside. Because what will that mean? That will mean, okay, we're not going to have any rate hikes in July, Fed's off in August, and they won't be back until the end of September. So kind of keep that in mind. Some little preparation for tomorrow as if we were going to do a show. So guys, thank you so much for watching this show. This was a bit of a quicker one than we usually do them, but I appreciate you guys all. Make sure to go to Tradeovate, sign up, start trading those event contracts. They're awesome. Go to placeyourtrades.com. There's a plethora of information there that I think you will love to use. There's some fantastic other shows that happen on the platform that you should check out. Subscribe to the channel, smash the like button. You can follow me on Twitter if you guys like. The link is down below in the description. I appreciate you guys as always. Thank you so much. See you next time. See you next Thursday at 11 a.m. Eastern Standard Time. Bye-bye.